Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to look at the usual picture with Bitcoin in terms of its short-term, medium-term, and the long-term outlook, as well as look at the altcoins of all the previous tips that I've given you and where they are today and where I'm expecting them to be in the next few months. And as always, a polite reminder that all my videos are for educational purposes only. Nothing in this video or any of my videos should be taken as financial advice. Please be sensible and do your wider research before making any investment decisions. So with that out of the way, your usual Snickers bar on a Sunday with a cup of tea in hand, eyes on the screen, and let's get cracking. So the title of this video is basically saying that we're about to hit a signal which has never been wrong in the last 11 years. So what is that signal and what is it saying? Well, that signal is the hash ribbons here. This is the BLX chart on the weekly time frame. And as you can see with all of these blue buy signals here, something is about to happen which is telling us where Bitcoin is going in the next few weeks and months. If we go back to the first blue buy signal that we got here, as you can see, it came right at the top here. At that time, we did have a little fallback here before we had this massive rise here. And in between that, we got another blue dot here and another blue dot here. So in this first cycle, we got 3 blue dots, which culminated in this blow off top here. So each of these blue dots would have been a fantastic buying opportunity for the following time period. So in the second cycle that we had from 2014 to the end of 2017, we had another series of 3 dots. The first one being here, the second one being there, followed very quickly by another one there. So these 3, if you look at the culmination of these, would have been a fantastic buying opportunity there. If we move to this cycle from 2018 to currently, we've got this blue dot here. Now, wouldn't that be a fantastic buying opportunity? At the time, it didn't seem so, because everybody was very bearish. However, that proved to be a fantastic opportunity, which culminated in this blow-off top that we had in 2019. Since then, in this cycle, we've had another 1, 2, 3, 4 more blue dots. If you take this period of time for all these 4 dots around here, this would have been a fantastic buying opportunity now with hindsight. And at the time, I remember showing you these blue dots in the last few months when these occurred. And this is what's happened since then. We've now had this rise here. So getting to the crunch of it now, we've got another minus capitulation here on the weekly chart. Now, whenever we have these, it is always followed by a blue dot, as you can see with these minus capitulations here. So we are about to get our 6th dot in this bull market. In the previous 2 cycles, we had 3 here, 3 there in the second one. And now in this one, it's been absolutely unprecedented that we're now going to get a 6th buy dot here. So what does that mean? Well, if these blue dots in history are anything to go by, what they're signaling for me anyway is that in the next couple of weeks, we're going to get another blue buy signal here. And that, to me, tells me that that could be the catalyst for the next massive rise towards the $300,000 mark. As you can see in history, this blue buying signal has never failed Bitcoin. It doesn't mean that we're going to go straight up now, because we haven't got the blue dot yet. And sometimes, as we've seen before, it can lead to a little bit of a fall before going up. But certainly, we are at or very, very close to the bottom here. And more than likely, with a high degree of probability, when we get the blue dot here, that would be a fantastic signal when we look back in 3 months, 6 months, 9 months, whatever time period. When we look back, we'll realize that that will be a fantastic buying opportunity. This is how I see it. And if you see it in the same way or in a different way, then please leave your comments below in the comment section and share it with us of what you think may probably happen here. If you want to support the channel, then please click on any of my videos, and then below the videos you'll find a box called Show More, which gives you a description box, and in that description box is the affiliate link with Etoro that I have. So I partner up with Etoro because that's the main exchange I use for all my investments. These are the reasons why I tend to use Etoro. It's a very simple exchange to use in terms of depositing money and withdrawing the money, as well as trading if that's what you want to do, as well as for long-term investing, which is what I tend to do. So if you want to support the channel, please click on the partnership link, and then what you'll do is you'll get this box here, and then you can basically put your username, email and password and just fill in the form there. If you like any of my videos and you find value in them, then please don't forget to like and subscribe to the channel. From the last video, I got a comment from one of my subscribers here. I'm not quite sure how you pronounce it. Is it the OWE or the OWE? I'm not quite sure. I'm sorry if I pronounce it wrongly. However, this subscriber mentioned that there is one thing that worries me a bit also, which I would like to address to you. If you zoom out on the Bitcoin and look at the structure since this year up till now, I can't help but unsee a large head and shoulder pattern playing out, which makes me think that we will likely have a hard or a short move to the downside. Would like your view on this. Thanks in advance. The head and shoulder pattern being referred to here. So what we have here is we have a shoulder, and then we have a large head, and then we have a shoulder. The first thing to say about the head and shoulders pattern is that they don't always have to play out. I think they're sometimes overplayed. However, having said that, the more times a neckline is being tested, the more chances it has of protruding through and falling to the downside. And the question then becomes, how far can it fall? And the way to measure it is from the top of the head to the neckline, and that's another 51% from here, where it breaks. So if you take the 50% from here, we'll take it to around about the $15,000 mark. Now, I'm not saying that's what's going to happen. I don't even think it's going to break here, because I still believe we're in the middle of a bull run. And in the middle of bull runs, some of these types of patterns, which in other situations and circumstances would break, as per their characteristic, in a bull run they act in a very different way. So I'm hoping and I'm thinking that with all the other indicators that are around, that this is not like a likely scenario. Certainly it's on the table and it's possible, but the probability is on the low side, I would say. I still feel the best measure of a fall here would not be really the head and shoulders pattern, but actually would be the Fibonacci, trend-based Fibonacci extension here. So if you take this and take it from the top, which is the 64,000, to the low point here, 30,000, and then back to the high point here at 41,000, these give you a more accurate picture of the levels at which the price could fall should we break this neckline here. So we've already been down to the $28,000 mark here. So we nearly touched this 38.2 Fibonacci retracement. The next level is this one here at 23,900. And I mentioned this in the last video and the one before. And the one below that is the 61.8. And this is the 20,000 level. And guess where that is? That's the previous all-time high. And the level below that is the 13,900, which, guess what? Which was the previous high to the 20,000. So these look very accurate levels should the price break this neckline here. And if we zoom out, we can see quite clearly that these levels match up quite nicely. So this $23,000 mark here is at this juncture here where there was quite a lot of resistance. And this 20,000 level is obviously at the 2017 high. And this level here, the 13,000, was at this high that we had in June 2019. So these levels would be the ones I would be looking at in terms of if the price fell from here. So the first one would be the 23,000, second level would be the 20,000, and the third level would be the 14,000. Am I expecting these levels? I am not, actually. I still think that there's a 70% chance that we're going to move to the upside and test the previous all-time highs rather than to break the neckline here. But there's still obviously that 30% chance that we could go down to these levels here. But certainly my expectation is to the upside rather than to the downside. Another reason I'm more bullish than I am bearish is the fact that if you look at the Bitcoin log growth curve, what we have here, if we zoom in on this current price action here, you can see quite clearly that we actually came all the way down and retested this Fibonacci retracement line here. But since then, the price has moved back to create this hammer candle here. And a hammer candle is usually found at the bottom of a trend. And with this long wick, as you can see, the story behind that is that the market is rejecting lower prices to these levels. And as soon as we came down to these levels, the buyers came in and pushed the price all the way back up to here. And currently it's at the $35,500 mark on this candle here, which is the current week. So this candle here is what they call an indecision candle. So we've had a rejection of higher prices and a rejection of lower prices, and we're exactly where the previous week price level started. So we have a decision to make, but certainly looking at this hammer candle here gives me a lot of hope and optimism that this candle is going to be a trigger for moving to the upside rather than to the downside. I've shown you this chart many times before, and it's usually the chart that I'm going to be using as part of our exit strategy. And the reason for that is, if you look here, the red zone and the green zones are basically your selling zones and buying zones. And currently we're here, and this goes up to the 27th of June this year, so just last week. This chart would tell you that we haven't gone to our blow off top yet. In fact, it's giving us a buy signal because we're now come back into the green zone here. So this green zone is where we're at the moment. And this is, if you look through history, if you'd have bought here, then if you look at the price here, the dark line that's going all the way up here, the price here is right at the bottom before this big massive move up here. Then the time after that, when we got into the green zone, was exactly here. Again, that preceded this massive move to the upside here. Then the next green zone trigger was over here. And look where we were then. This is when we were at our $3,000 mark. And this was followed by a big move to the 14,000 in June 2019. Then the last time we came into this zone was over here. We were just over the $10,000 mark. And look what happened after that. And now we've come back into the green zone. It doesn't mean that it'll take off from here. Obviously, it can go down a little bit more, as you can see from these lines. We could go to the bottom of this green zone. So there could still be a little bit of a give down here. But certainly, with hindsight, if you bought anywhere in the green zones, that would have been a massive opportunity for making a large amount of profit. And could this be that opportunity going forward? So certainly in all of the time we've ever seen the pool multiple go into the green zone has always been extremely profitable. And now we have another opportunity to do so. And you would ignore this at your peril. If we take a look at the dollar, what we see here is very, very important. We've come to the point where the dollar has come to the resistant point over here in this downward trajectory. Should the dollar get rejected from this point here and go downwards, we could expect the Bitcoin price to be going upwards. As we know, there is an inverse relationship with Bitcoin and the dollar. So this is very, very important. Are we going to get rejection here That is the big question. So we'll need to keep our eye on the dollar here. Certainly since last week, we've got a bit of a rejection at the moment taking place. So here's a close-up view of it. We came up last week here. This was a critical point. As you can see, a red engulfing bearish candle has now taken place this week. And this is usually very, very bearish. It's a bearish engulfing candle, which means that the body of the candle is greater than the body of the previous candle. So the trajectory for this, you would expect, would be to the downside. So as the dollar goes down, we can expect Bitcoin to be going to the upside. And if we have a look at our target chart, which I showed you last week again, is that we're still at the bottom of this trend line, which has been stretching back before, right up to the 2010 inception of Bitcoin. And if we zoom in on this point here, and this is exactly the same as for the log growth curve. So the hammer candle tells me that this support line has done its job, acting as support here. And more than likely, we're on our way to the upside rather than to the downside. And that this support doesn't look as though is going to be breached anytime soon. If we have a look at the shorter term view of Bitcoin and the levels that we need to be going past in order to reverse the trend, then what we need to do is to look at, first of all, this current candle here. This is a weekly chart. And unless we get above this top of this wick here, which is at 36,700, lower high, lower high, lower high trend won't be reversed. So we need to get above this point here in order to reverse this lower high, lower high, lower high pattern to a higher high above this point here. So that's the first thing. The second thing to note is that if we do get past this 36,700 level, we have to get past this point here, because this is where we had the first major correction. So this was a very strong rejection point. And this level is at about $42,000 mark. So once we get past this, we will find rejection at around this level here. So currently we've got this pattern developing here. If we take it to the bodies of the candles here, and we're just breaking out. As I'm doing this video, we're just breaking out of this pattern here. Whether this will be another fake out, only time will tell. But certainly, if we do our Fibonacci retracement here from the previous high, which was up here at 41,000, to the bottom here, we can expect the price to go to around about the 36,500 level here at the 61.8. So this is the golden pocket where we can expect the price from where it is currently at 35,400 to go up to this level here, 36,400, 36,700 here. So it's right up to the point of this previous low. And the question is, will we get rejected here? Certainly, it's going to mess around at this price at around the $36,500 mark before making up its mind to go upwards or downwards. If it comes back down, this will have been a fake out. If it goes above that, the next price, if we break this level here, 36,500, would be around about the $41,000 to $42,000 mark, where I would expect a correction. Let's wait and see. That's the current price targets that I've got here. So the first one is 36,700 to come back to the previous lower low. So the next level after breaking this lower low of 36,500 would be this $42,000 mark, which basically will take us to this neckline here. And if we break this neckline, that's when we can really truly say that this downward trend has been reversed, because we'll break this neckline here. Breaking this neckline would be the green light to say that the price is now going to move to new all-time highs from there onwards. Okay, a quick look at the altcoins, and we'll start off with NEO here on the weekly chart, so we can zoom out and have a look at exactly what's happened in the last few months. So when I introduced this back here in December, January time, I said that once we break this neckline here from this cup and handle pattern, that's when we'll go to the races. And we went all the way up towards the $145, $146 mark here. But as Bitcoin's had a correction, and as I've always said, all the altcoins will follow Bitcoin. As long as Bitcoin's in a bull market, these altcoins will be in a bull market. But if Bitcoin falls, the altcoins will fall much harder. And this is exactly what's happened here. We've had a fall virtually back to these levels here. So for me, this is an amazing discount and another opportunity for those people who didn't get in here. The altcoins are being very generous and giving you another opportunity to buy in at much lower levels here. For me, as long as we understand that Bitcoin is in the bull market and that we're going to move to its all-time highs towards the $300,000 mark, then this would present a wonderful opportunity to get in before it does this in the next few months. Certainly, if you zoom out further, you can see there's another cup and handle being developed here. Look, on a bigger scale. So it's only a matter of time before we come up to this neckline here, before doing what it did over here, to doing this further up over here. And if we have a look at Zcash, very similar to NEO, we broke this neckline here on this cup and handle pattern. Once we broke this through here, this is when I introduced the Zcash to you. It went all the way up here towards the levels of about 360, 370 mark. And again, it's giving us another opportunity to rebuy back. So it's basically retesting, just like NEO, retesting its old resistant point as support before we start moving to the upside. So again, another amazing opportunity to get in at a lower level. These prices here at 117 to 120 presents to me great value as long as we believe that Bitcoin is in a bull market and we're going to reach a target of anywhere around the $300,000 plus. Then this would take you to much, much higher levels in the future. Cardano is another one, but this is a little bit of a different story. Once it broke out from its neckline here, the cup and handle pattern that was forming here, it broke out at this point around about the December mark, but it's never looked back. And look what's happened. It's consolidating rather than coming back down. So there's a huge amount of pent-up demand still in the Cardano price, which tells me that once Bitcoin starts going, this will take a very big rise to the upside because people are not prepared to sell the Cardano and bring it down to the previous neckline here to act as support. So there's still a lot of bullish momentum in the Cardano price here. And I would expect once Bitcoin starts going up, that Cardano will start shooting to the upside. And even at these levels, at $1.4, would present a fantastic value. Quick look at XRP. I know quite a lot of my subscribers have XRP in their portfolio. Again, a wonderful opportunity has actually presented itself with XRP. Once we got past the bad news from the SEC in the USA, around these levels where it fell all the way down to 17 cents, what we've seen is a parabolic rise all the way up to these levels here at around what, $1.9. However, with the Bitcoin falling, it's come all the way back to this neckline here, and again presents a wonderful opportunity here to buy XRP for the next leg up. So again, a really fantastic opportunity for XRP. A quick look at Chainlink. I know quite a lot of people have an interest in this. And again, a wonderful bullish chart pattern ensuing here. Once we broke the neckline at this point here, we went all the way up to these levels here, around about the $52, $53 mark. And once again, we've come back and retested the old resistance line over here as support over here. So it's now only a matter of time before it starts going to the upside and follows Bitcoin. So at $18 at the moment, the current price, I would feel as though that's presenting a fantastic value. Even to go up to these $53 mark, you've got more than 100% in there. Finally, have a look at the Bitcoin miners. Marathon Digital Holdings is the one that most people have in our Wisdom Bites community on this channel. What we've got here now is that having topped out at around about the $57, $58 mark, we've had a correction. We've come up to this W pattern here. So it may well be that we have one more leg down slightly toward the $25, $26 mark before we take off to the upside. Just like when we were down here, we came back one more time slightly and then we went up. So this again looks very, very bullish, and it's only a matter of time before we start moving towards these levels at 57, 58, it's all-time highs. Again, they're driven by Bitcoin. So as soon as Bitcoin starts to go up, the Bitcoin miners will also go to the upside. Just a reminder that if you want to buy the Bitcoin miners, then one of the ways to do it, and the way I do it, is to actually just go onto the Etoro website here, and I have an affiliate link, as you know. And once you've signed up with Etoro, you'll be able to have access to not just the Bitcoin miners, but to the other altcoins as well as Bitcoin and Ethereum. It's a very simple process. If you click the link here, you'll go to the Etoro website. You can just fill in your details over here on the right-hand side, and basically you'll have access to them very shortly afterwards. And finally, onto our wisdom bite for today. I'm going to tell you the story of the butterfly. It's an amazing, simple story, and it will actually transform your life to the point where when you go through the struggles of life, like everybody does, you'll look at your struggles in a completely different way. No more complaining and moaning and whinging about the difficulties and the hardships of life once you've heard this story here. Once upon a time, a man found a butterfly that was starting to hatch from its cocoon. He sat down and watched the butterfly for hours. As it struggled to force itself through a tiny hole, then it suddenly stopped making progress and it looked like it was stuck. Therefore, the man decided to help the butterfly out. He took a pair of scissors and cut off the remaining bit of the cocoon. The butterfly then emerged easily, although it had a swollen body and a small shriveled wings. The man thought nothing of it, and he sat there, waiting for the wings to enlarge to support the butterfly. However, that never happened. The butterfly spent the rest of its life unable to fly, crawling around with small wings and a swollen body. Despite the man's kind heart, he didn't understand that the restricting cocoon and the struggle needed by the butterfly to get itself through the small hole were nature's way of forcing fluid from the body of the butterfly into its wings, to prepare itself for flying once it was free. You see, in life, in your life, your struggles help to develop your strengths. If you never struggle, you will never grow and get stronger. And so it's important for all of us to tackle challenges on our own sometimes and not rely on help from others all the time. Go out there and on your way, go challenge your own obstacle and be your own man. So please remember, when you are struggling in life, that's nature's way of strengthening you for the future. So what we can learn from the butterfly is that struggling is part of nature's way of strengthening us to achieve our successes of the future. And if we don't go through those struggles, we're not going to achieve those successes, certainly not to the extent that we would otherwise do had we struggled. And I'm going to give you now a few profound quotations which have helped me in my struggles of life, and I hope they will help you too. So please listen very, very carefully to the following. Okay, so we'll leave it there. Thank you once again for watching. Very much appreciated. And if you found value in the video, then please do remember to like, subscribe, and to turn on the notification bell. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.